Hi, everybody. Jeff Yastine here. Welcome to another edition of Wealth Press TV. And as always, make sure to subscribe to us, like us on social media, and continue to follow us on Twitter, Facebook, and YouTube. And I'm joined by somebody you know very, very well, Roger Scott. Roger, welcome.
Thank you, Jeff. I appreciate you having me on here today.
And, you know, the thing that's close to mind here for not just you and I, but for investors all over the world is the upcoming election here next week, Biden versus Trump, Trump versus Biden. Let's talk about winners and losers depending on which group winds up taking the White House, and of course, and we also have to kind of extend the conversation to talking about Congress as well. But what are you thinking as we sit here and look out a week from now and trying to anticipate what stocks will move higher depending on who takes the White House?
Well, again, it's a very interesting topic, especially when we're counting down to the election practically, hour by hour at this point. I mean, people have been waiting for this, and it's going to be an interesting one. As you know, this is the most bipolar election we've had in decades. I mean, I don't think there's one thing these two guys agree on. I really don't. But that makes it interesting. Look, we all know the markets does not like unforeseeability. But at the same time, it thrives. Volatility causes directional trends to develop and move forward. So I think we're in for an interesting surprise. Now, before we really get into the discussion and get into the nooks and cranny of what stocks move, I want to talk about the overall picture, because I think we got to take this with a grain of salt, and I'll tell you why. Everybody thinks, I shouldn't say everybody. The majority of the public believes that this election is going to be a major driving factor for the stock market. I personally believe that it won't. I personally believe that the events that began this year, the COVID-19 and the stimuli and the direction that the world began heading to, we're talking 10 months, 8 to 10 months before the election.
Right.
I think that is going to be a much bigger factor, and I think that's going to be a superseding factor in the economy and not the election.
Well, Roger, let me burrow in just a tiny bit on this, because we all carry in our minds what happened in 2016, where you had this initial sell-off. I can't remember, it was just overnight or for a day or two, and then the market kind of got a hold of itself and just marched higher. Do you expect, I won't say which direction, I want to ask you to say which direction or not, but do you think we will see that degree of volatility in the days following the election, or are we kind of already seeing that and have seen that already because we had a peak in August, September, and we had another sort of intermediate peak here, and here early in this week, a week before the election, we're seeing a bit of a sell-off as well, at least for today.
Well, that's a great question. And to answer your question, I think we're going to have immense volatility. I think we're going to have an immense volatility, but I think it's also going to be very short term, not as short as the volatility we saw in the last presidential election. I think a little more so, and I'll tell you why. I don't think we're going to have a clear winner early on in this election. I think we're going to have a lot of drama in the ensuing days with who, Trump is not going to go give it up easy unless the decision is just so out of favor. Furthermore, we already know, based on how the voting system works, that if the election is close, and it looks like it's getting very, very close, at least that's what the polls are saying right now. I looked this morning, and Trump is now closed in by 4 points. Again, it depends on what poll you look at, and that's a whole different topic in itself. But my point is, I think the drama is going to ensue for maybe 72 hours to maybe 96 hours following the election, and I think maybe even further on into next week. So we're going to have the election next Thursday, say Friday. I think by the following Wednesday or Thursday, the market is going to set a tone. Now, that's the fundamentals talking. technically, interesting enough, and I know you look at technicals as well. You're a fusion trader such as I am. If you look at the S&P 500, it's building a symmetrical triangle right now, which also coincides with a non-directional trending kind of a choppy trading action. If you look at it, it's kind of looks like it's got maybe a week left. Coincidentally, maybe not. Now, interestingly, if you look at the Russell 2000, it's got an ascending triangle, whereas the S&P has a symmetrical triangle. And I think that's also very, very interesting and very telling, but I think I'm moving the script ahead a little bit. So to answer your question, I do think we're going to have volatility, but then I believe the market is going to begin trending and trending very strongly. And I think we're going to have another leg up.
So let's break it down in terms of scenarios here. Looking beyond the election, let's say that President Trump wins a second term, and knowing all the caveats you've said here, what groups or what particular stocks, if you want to talk about those, are the winners under that scenario, just irrespective of everything else, which I know is a very hard thing for any trader to go down to, because there's always little bits and pieces of stuff. You're like, well, if this happens, if that happens. So we just want to make sure we set all that up properly.
I will. I'll get into all that, and I have a lot of good, juicy information for the traders, including a report that just came out with Bank of America that I did a video on, and I'm going to talk about here, which really takes this apart. So I got a little surprise for you. I got some good stuff, really good information for our readers and viewers. But I just want to preface this by saying this: there was a study done. This is just a overall odds kind of thing. Because, I don't trust the polls, because I personally don't know anybody who's ever been polled before in a presidential. I've asked the people around this office. I've asked my family members. Nobody I know has ever been polled. So I'm curious, who are these people that they're polling, where they're getting these numbers from? That's number one. But beyond that, I want to start off this, what stocks like Trump, what stocks like Biden. I want to start it off with a study, a study that's been going on for over 200 years, okay? And the study says that according to the study, Trump has an 87% chance of winning. The study goes like this: ever since George Washington, whenever you have an incumbent president seeking re-election, and it's happened 16 times, and in the preceding 3 years, the stock market has been up by over 30%, the incumbent continues to run again. So this could be the 15th time. Now, it worked 14 out of 16 times. The only 2 times that it has not worked was in 1992 when Clinton versus Bush, right, and Adams in 1800, and that's before the stock market. But the charter banks had 30% more deposit. So those are the only 2 times in history that poll did not work. So again, don't focus too much on what the polls are saying. I would kind of focus on more on what the stock market is saying and what certain stocks are saying. And that's kind of, I just wanted to preface the topic. We were going to go on with that, because that is pretty important. I mean, it's not a huge sample size, 16, but it's better than nothing.
So let's circle back around to discussing the Russell 2000, because that's something that you and I and Jeff Z and Adam and all of us have been talking about on the weekly roundtables. That's been a stronger index for the most part over the last couple of months or so. And before we sat down to talk about all this, I was looking at, like, since the beginning of September, the Russell 2000 is basically flat. Let's say up about 0.5 to 1%. And I've got as of this particular day, because we're seeing a sell-off in the broader market, with the Dow, the S&P, and the NASDAQ down, between 4, 5, 6%, depending on when you want to look at it. So what is that saying to you? And again, is there a bet to be made in terms of stocks and winners and losers regarding this upcoming election?
Well, I'm glad that you moved on to this topic. This is a great topic, and it's perfect for what I want to talk about right now. If you look at the S&P 500, the S&P 500 made an all-time high on September 2nd, okay? Since that time, it has not been able to go above that level. Conversely, the Russell 2000, which has been lagging behind the S&P 500 since the day Donald Trump announced the trade war, okay, has all of a sudden come back to life and started soaring. And as I mentioned previously in our discussion here today, the Russell is furthest away from the 50-day moving average to the upside. It's exhibiting the strongest relative strength on a daily basis, and it took out September 2nd high that the S&P could not. So by every factor, the Russell 2000 is outperforming the S&P 500 right now. Now, the Russell, and I'm going to say this, other factors, I'll stick with the Russell, but then I'll jump into other factors. There are other stocks that are also telling us that Biden is winning the election. Now, you may be asking, why is that? How does that work? Why are you so sure that the small caps are liking Biden versus Trump? I'll explain that. There's a very fundamental reason for it. Beyond that, there's a sentimental reason for it, and there's a technical reason for it as well. So first of all, the Russell 2000 is smaller stocks. The average market capitalization of a stock in the Russell 2000 is about $1.6 billion. All right. That's a tiny company if you look at comparison to the S&P 500, where you have billion-dollar, trillion-dollar companies. So the Russell is kind of like a almost like a dish for organisms to develop, like stocks develop.
Right.
And that's what it is. If you look at Netflix, it was a Russell stock. If you look at Domino's, it was a Russell stock. All of these stocks, before they went prime time, as I like to call it, they were all Russell stocks. Now, there are two factors that caused the Russell to slow down in comparison to the S&P 500. Why was the trade war so impactful for the Russell 2000? Because most of the Russell stocks are one-trick ponies, where the S&P has conglomerates. In other words, if you look at the Russell, 80% of those stocks or parts of those stocks were made in China, whereas the S&P, take Johnson & Johnson. If one of their drugs or if something they make doesn't work, they've got 50, 60, 100 other products and services that'll all take over that market capitalization. Weaker stocks, smaller stocks, they don't have that strength. They don't have that market capitalization. So China, the trade war is bad for small caps. If Biden was elected, he would completely redo this trade war in his first day of presidency. He'll tell you he'll be tough on China, but don't let anyone fool you. Trump is going to be tough on China. Biden is not going to be tough on China. Stocks like Alibaba, which I'll get into, are loving him right now. So the Russell 2000, and that's number one. So the trade war is one factor because you've got a lot more companies that are made in China, more regulations, more one-trick ponies, less conglomerates. But the second biggest reason is actually what Bank of America pointed out this weekend. Small cap internet companies may lead exposed to election uncertainty as a potential negatives like tax increases can be outweighed by stimulus under a Democratic sweep. So smaller stocks will get a lot more stimuli. Stimuli and small caps go hand in hand. You give a stimuli to an Apple, it's not going to really do that much. You give a stimuli to a company that's worth $1.6 billion, that company can double in size.
Sure.
So under Trump administration, you're going to get less stimuli and you're going to get the trade war. Under Biden, you're not going to get the trade war and you're going to get stimuli, which is a double whammy for Russell stocks. And that's why Russell loves Biden. And according to the small caps, they are interpreting or pricing in a Biden win as we speak. On that topic, let me tell you some other stocks that are loving Biden right now. If you look at utilities, right now, the number one, if you look at the XLU utility sector, it is the number one on a month-to-month basis. Out of the 10 major sectors in the S&P 500, Jeff, it has been outperforming the market on a broad basis. Now, if you dig deeper and if you look at the constituents of those utility stock, the one that has 16%, there's like 50, 60 stocks in there. This one stock has 16% of the entire sector. It's NEE, which is a big
NextEra. Yeah.
Yeah.
Yeah. In here in Florida, Florida Power Light is one of the subsidiaries. And yeah, I know NEE, NextEra, is one of those stocks. And sorry, I didn't mean to interrupt you, Roger, but
That's okay.
it is one of those stocks. They have been very much into solar and renewables. And I only speak that as somebody who writes a check to them every month for my power bill. And I've seen them go into renewables much sooner and really kind of restructured elements of their company to take advantage of that. I think a lot sooner than I saw a lot of other utilities do that. But on that topic of utilities, how do we know that isn't really just a matter of so many people are still really defensive and just very concerned because we've got the election on one side, but we got the pandemic, and we know the resolution of the election is coming up soon. The pandemic is less so that. And I can't help but think there's a lot of people just camping out in the utility sector because they're like, hey, I'll get my dividend, and I know one way or the other, this company is more than likely going to be around a year and 5 years and 10 years from now. So I don't care so much about participating in the speculation of the stock market. I just want a return of my principal, not so much return on my principal.
Well, that's a great point. And what I did was I dug deep into the utility sector this morning, and I found out that the difference there's the biggest contrast right now, I think in history that we've seen between the renewable energies and the traditional energies. And as far as dividend, the traditional energy stocks are giving up more dividend, and they're cheaper, so the yield is much higher as a result of that. So if I was thinking along those lines right now, I would be bargain hunting and looking at traditional companies and bidding them up instead of bidding up more speculative companies, if you will, that are making all-time highs. So that argument, the argument that you're making is actually would tell us that strength is coming into all utilities, or whether they're evergreen or not, and that's not the case. We're actually seeing a lot of strength coming into the evergreen companies, but not so much into the traditional companies. It's just that the stocks with the largest market capitalization right now, or the largest control, like 16% versus 5%, happen to be renewable energy stocks. Okay, so I do believe that has more to do with the election. And look, and let me back up for a second. This whole thing that
Sure.
Trump and Biden were talking about Trump making it look like Biden wants to put traditional energy companies out of business. Look,
Right.
the truth of the matter is this, and I'm a conservative Republican, okay? So I'm throwing that out there, but I'm going to tell you guys the truth here. 56% of America is using renewable energy right now, and that has nothing to do with the election. It's just the way things are moving. It's been moving this way in Europe for even longer. I think Europe is at 73% right now. The point of the matter is, it's not a president thing. It's not a political thing. It's just the way the future's moving. It's the way the world is moving. It really has very little to do with the president. And what Biden was trying to say was, it's just the way things are. He didn't say 56%, but look, let's be frank here. 56% of Americans are already using renewable energy, and it's not, and the numbers growing double digits every year. And that has nothing to do with anything other than the fact that it's cheaper, it causes less pollution, and people are not noticing the difference. And that's the biggest factor. It's not a political argument, okay? It's not a political argument. So I think the sector is going to go up regardless, but I just think it's interesting that right now, with the election on the table, that stock happens to be rising really, really strongly and sitting near all-time highs by less than 1 or 2%.
Well, since we're on the topic of renewables, and this just kind of goes to what you were saying, there are stocks like you're talking about NextEra that are at all-time highs. I think at this point it has a larger market cap than like an Exxon, which tells you a lot between old energy and old tech, if you will, and companies like NextEra, which are kind of going into this fusion of utilities, but it's focused on renewables. But how much do you think the renewables trade is already sort of priced in when you see stocks like NextEra at all-time highs? And are there still plays to be made in the renewables sector again, presuming either one, a Biden win, or two, a Trump win, but you're turning to looking for stocks that have not already been bid up in the renewable sector, because it is this broad trend that existed long before the Trump administration came into power.
Well, if you recall, Jeff, I started and I prefaced this conversation with the fact that I believe that the shape of the world and what happened in January and December of last year and January of this year and February of this year is going to be a much bigger factor for shaping the world. And I think this is a good time to kind of go back there, and I'll go for full circle. I think these companies, these renewable energies, they are at a growth phase right now. And I think they're going to go up regardless of who's going to win the election. Look, 2 months ago, we didn't know who was leading the polls, who was going to be. We had no idea. And these stocks were making all-time highs. I think we are going to see increased buying pressure and kind of a 4 to 5 year penetration into the future, as Bank of America and Baird both said in their upgrade last week, in anything tech because of COVID-19. So I think even if these stocks, even if Trump wins and these stocks move down and start hitting the 50-day moving average, I think hedge funds are going to start bidding them up because their time has come. That's what it is. Their time has come. It's not about Trump or Biden. It's the fact that their time has come. Biden is going to put less forks in the road, so to speak. But the time, the demand, me driving in my area and seeing half of the roofs with solar panels, me getting a bid to get a pool heater and them giving me a solar choice. These things are the fact that we can get this. The fact that there's so much pressure on the environment right now, regardless of who's going to win the election. So I think those are the bigger factors. And I think these sectors are going to go up. This sector is going to go up regardless of who wins the election. Granted, a little smoother, less bumps in the road with Biden, but I think they're both primed. But interestingly that you mentioned other stocks, I've got a couple of more that I really like in this category. Sure. So I wanted to kind of mention them to you. First Solar, FSLR, we've talked about that one. Very good one. Plug Power, I just recommended it last week for one of our programs. They make batteries for cars, Chinese car, very, very fast. In China right now is going crazy with solar power. And BE as well. I forgot the name of the company, but
BE
the ticker
is that's Bloom Energy. So Bloom Energy and Plug, it's interesting because they're both fuel cell stocks. Now, both stocks, especially Plug has been around for a long time. I mean, as a stock, it's been around for roughly 22 years or so. But you think that's a real play and not just sort of a speculative sort of reinflation play based on the Fed? Because I've pointed out to people before, and I'm not saying, like, Plug is really interesting because fuel cells, which is really what the play is here for Plug, fuel cells, I think that their time has come. And we're going to see a lot more discussion about fuel cells and hydrogen, whether it's Trump or Biden in the next 4 years.
Exactly, and it's global.
Plug,
and it's global.
Elaborate your thinking on Plug here, especially. And Bloom Energy.
Yeah, basically their time has come. We're there. China's right now is getting hot and heavy with these electric cars. They're going to be having a model that's coming out in about 2 months. Other parts of Europe, South America, the time has come. We are there right now. I don't believe that Tesla is priced where it is because of the car. I believe it's priced where it is because I believe ultimately they are a alternative energy company, and that kind of timing has come. I think if it wasn't, I don't think you would see Tesla doing what it's been doing for the last 2 years, with the fundamentals completely being grossly overvalued and the stock having this kind of momentum. I think the time has come. I think it came a year ago. I think right now we're just kind of setting the tone and creating an aisle, so to speak, creating a lane for these businesses. But they're here, especially if you look at Asia and how they're dealing with hydrogen right now. Asia has been. America's still the number one leader in the world in terms of economy. But look, Asia, China, Korea, Japan, they are every year gaining on us. They are. I mean, it just is what it is. I know if you're a real American, I'm a patriot. I love America. I love what America's doing. I will be American through and through. But these countries are gaining. Look at what's going on with oil in Europe right now. I mean, the gluts that we're having here, and nothing has been able to stop these runs in these stocks. And I think it's for real. And I think the fact that these stocks are making multi-year highs is also indicative that their time has come.
So, Roger, we got about 5-6 minutes left here. Other stocks, other things to either buy or to avoid, for that matter, depending on again, Trump or Biden.
Well, here's what I think. I think that certain internet stocks are going to see trouble if Trump wins. If Trump wins, the FANG stocks may be in trouble. If Biden wins, the FANG stocks may be in trouble because there's a really high chance that we're going to start over-regulating and breaking them up. Okay? So I think Biden is not great for Amazon, Netflix, Google, or Facebook due to regulatory environment. Also, Biden is going to increase taxes, and Biden is going to push for global taxes for U.S. companies. I know it sounds crazy, but he's going to do that. And that's not good for Facebook, Alphabet either, because those companies have a lot of overseas exposure. Conversely, smaller internet companies, as we mentioned before, they get a lot of stimulus from the government. So smaller internet companies like Russell 2000 internet companies should do well under Biden. Now, under Biden, another set of internet companies that should be doing really well is e-commerce and online travel. Why? Because typically, historically, we've had a stronger GDP with a Democratic government. And if we have a Democratic government and GDP's higher, these companies are going to spend more money online advertisement. So some companies that will benefit from it are Carvana, Expedia, Wayfair. And also those companies are benefiting from the stay-at-home environment. So I kind of gave you 3 stocks that are like a double whammy: the stay-at-home environment and Biden environment. Now, what you really got to be careful for, and I'll conclude here, folks, you got to pay attention really close to California's Proposition 22. It's a big, big factor. Are you familiar with this Proposition 22, Jeff?
Only on the headlines.
Well, it's a gig. We have a gig economy, and what California wants to do is they want to tax 25% for anybody doing Uber, Lyft, and also this would also hamper Amazon food delivery and Amazon delivery as well, delivery companies. So, and what California is looking to do is push this to other states. So this can put a huge wet blanket on Uber, Lyft, if Democrats take office, because this can slowly move into other parts of the country. As a matter of fact, there's a lot of talk that it will. And California is often a catalyst state, unfortunately. One of the reasons why I moved out of there.
Any last parting thoughts here, Roger?
Keep in mind, I think the election is not going to be a long-term factor or as big of a factor because of all the things that started moving into the economy, like stimuli from the Fed and central banks. Last time the Fed and central banks put stimuli into the market doubled in size. It went from 30 trillion to over 60 trillion dollars between 2008 and 2014. And that had a lot more impact than a presidential election. And I think that's something people need to know.
So, Roger, it seems like a good spot for us to kind of wrap things up here. You've given us some stock picks and given us a lot of context. There's a lot of moving parts that we all have to evaluate as investors between now and the election, and obviously in the weeks and months beyond the election. So thank you for coming on.
Thanks for hosting me, Jeff. I had a great time, and I'll see you next time.
And for all of us here, make sure to subscribe, make sure to like us and follow us on all forms of social media, Twitter, Facebook, and YouTube. I'm Jeff Yastine, and we'll see you again soon for another edition of Wealth Press TV.